What's up, folks? Happy Friday once again to you. This week, we're coming into the weekend with a little bit of FUD. I don't know, some more Middle Eastern stuff. If you don't recall, we've had several of these things before. That was enough to make the market sell off a little bit. But, you know, people have been asking me this week, especially on this last couple of days today, is this a buying opportunity? And, I'm looking at the chart and it's just, well, we're going to talk about that. And then things I have and have not been buying this year. I mean, everyone wants to buy the latest fads, what everybody's talking about on social media. And if you stare into the abyss of social media, sometimes it'll stare back into you. But I've maintained pretty consistency, liking things that nobody really cares for. People think they're dead and things like that. And I want to just, this is a little bit of bull posting on my part. And usually I have a rule: when you're bragging, you should be taking profits. But I just want to kind of talk about thematically, the things that have worked out this year and haven't, obviously. But yeah, we'll let people filter in. Make sure if you're one of my early people, do a like. That probably helps the algorithm out a little bit. And we'll talk here in just a second. Be right back after the music. Yeah, that was last night when Israel shot some rockets to Iran. And then later in the day today, apparently they have shot back. But I don't really care about all that. It's fun for news to people to talk about. But I think the market from last year, having these kind of Middle Eastern conflict dominated headlines, I think it doesn't really care that much anymore. I can't even go back and tell you like when these were, but before we had the tariff debate, it was Chris October of was it 2023? Was it? When was it? When was that whole thing? Yeah. So that was this Middle Eastern strife. That was a nice little pullback. That was actually a pretty big move when that happened. And there's some other Iran and missiles that happened at some point later. Those are the kind of pullbacks that I want to see. So people have been asking me this week, are you buying? Because, here's today, it's been bullish all week this week. And we got a little bit of a pullback today, but it's really nothing. I mean, as I always say, I always remind people to watch, statistically speaking, like looking at an almanac like a farmer would, every every year, on average, you're going to get 2 to 3, 5 to 10% pullbacks. And those are your buying opportunities. And with a little 1.26% pullback, nah, I don't think so. And so I wait. And people have been asking me, are you buying? Are you buying? And no. And that's what I want to talk about today. Is I like being a weirdo. I like being contrarian. I like being a troll. That's why he's my icon. Um, I like to buy stuff that people aren't buying, or people that think that's dead. Um, that's really where the gains are. And coming into this year, everyone's asking me, "You buying Nvidia? You buying Bitcoin? You buying Palantir?" And I was like, "No. I mean, I already have Nvidia. I already own Palantir, so I'm happy to let them run, but I'm not going to add to them." S- Temperamentally, it's really hard for me to buy into like YOLO longs, like in case of Nvidia, go on the weekly, it looks something like this. Of course, it's AI, bro. It's the best thing ever. It's what everyone's looking to buy. It's what social media is talking about. But you got to be careful. Social media is part of that whole. If you stare long enough into the abyss stares back at you, sort of thing. I like to go on social media, whether it's Twitter or it's like different Bitcoin maxi chats, and kind of poke them a little bit, troll them a little bit, have them tell me that I'm wrong, to test it. But at the same time, I expose myself to being influenced by it. I swear, every time I go on Twitter, it's always trying to get me to buy Bitcoin. And that's one of the things I still get emotional about trading, but there's one of the things I have excised from trading and investing is I don't jump in with what everyone's doing. Okay. And the things that have been really good this year for me, and I post them in the Discord, I post them, talk about them in the live stream, but they don't get much social media engagement because who the hell cares about a discount retailer like Dollar General? Who cares about an appliance manufacturer? And Dollar General, as I said, I'm running kind of in danger of my rule here. If you're bragging, you should be taking profits, but we're gonna forego that because these are long term holds. Like these are actual long term holds. These are not like long term holds. Like I bought Nvidia, here, and I'm sitting here telling me it's a long term hold, which it probably is down here, or any other those things. I mean, seriously, I got into things like Dollar General based on very simple volume profile. And that was from the start of this year. And I will talk about this idea generation because sometimes I even have trouble like finding ideas. And one of the reasons I do this live stream and one of the reasons I have a Discord is to get people talking and like to source some ideas. I mean, look at Whirlpool here in just a second, but that was a alert that I said from a live stream back in 2023, 2 years ago, as a dividend play that it came down to what I like to do. And this is what I've been doing this year is looking for these long-term volume profile levels. And we're going to talk about a little bit more about volume profile and why it's so important later. I talk about every live stream, but we'll reiterate that, especially when it comes to Bitcoin. I want to talk. I got a lot to talk about today. I got to kind of organize the thoughts in my head. But so earlier this year, Dollar General, it came up on a spike scan. Now, the other thing I like to do is I like to look for 30-minute spikes. Okay, that's where price opens, goes down, shoots back up within the first 30 minutes of the day. But then I go and look at the broader picture. And what I noticed is if we go all the way back to 2015, 2016, you had that level of support, that floor right there. And so that is where price was holding there on Dollar General. And so bought it, talked about it, was very bullish on it. And I remember when I made fun of it, saying like, "Oh, it's like Dolce and Gabbana or something like that," because nobody wants to buy Dollar General. But if you look at if you people want these huge tech stock gains way late into the trend. They want to get what people have already gotten. They want to get the 100% returns, double digit returns in a day kind of thing. And you're just not going to get you just in your head, see, this is one of the things, like I said, I still am trying to iron out the things that would make me a perfect trader. All I ask for is perfection. But the one thing I don't have to iron out is this chasing of returns. I temperamentally look at something like this, which is down, 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 and I'm like, this I want to buy. This I want. Most people, like, they do the opposite. I wish I could flip the chart around and show you the opposite. Can I do that? I wish I could do that in trading view, maybe like flip it around, but I mean, well, let me just let's just look at one thing that's just all the way up. Yeah, I don't want this. I don't want uh I don't want a Bitcoin right now. Even though everyone's going to tell you that it's going to 10x from here, maybe. Just the same kind of people will tell you that, oh, this thing's going lower from 71, but it's not. And from that point there, from the point where, let's find the exact moment. Yeah, right here, that spike right here that came in, simple spike, March. Where are we from there? Was it like 60% almost? Again, running afoul of my bull posting rules, but 53%. 53% up on a discount retailer because it was oversold and you're getting a big bounce back from the bottom. These are the kind of things that I want, and they're not sexy. And if I post about it on social media, nobody's going to, follow or like, share, subscribe. They're just going to roll their eyes and move back to whatever social media is yelling about that has 1,000 likes. But people, those 1,000 likes don't make money. They do not. Whirlpool, if I can say it, was one just the same case. And the reason I'm showing you guys this is not just to just brag and toot my own horn. It's just kind of give you an idea of like what is really a good thing to look for. I mean, what is let's see, oh no, it's all the way back from the start of the low in 2008, the bottom of 2008 to here. The volume profile for that whole thing, including the COVID low, is 75.26, and I had to kind of hang out with this a little bit. Oh. So, interrupted by a friend. Let me message him real quick. But, sorry. Just checking to make sure it's not an emergency. Take care, friends. Info line. So from that level to here today, I don't know what it was. Why it was up 4% today? That's another 20%, 40% up on an appliance manufacturer. These are the kind of opportunities that I want. Things that people aren't looking at. What would be the return on NVIDIA? And we'll talk. I'm not going to say that it's a bad thing to have NVIDIA, but because I own it, I have it since 2020, and I'm just kind of riding it. But from the beginning of the year to here, it's been a little better. January the 2nd to here, it's up 5% year to date. I know I'm picking a random point in time, but it just kind of goes to show, like, if you had just started the year out trying to get NVIDIA, you could have gotten better. Obviously, if you would have tried to get on this dip down here in January, you'd be up 20%, same thing, basically, or down here. But basically, when everyone's looking to get into something, you need to stay away. And then when you have a major FUD event like the tariff, that's the only time you want to buy. So here's the process. If you have something that you like, if you have something that you think is just the best thing ever, don't just go out and buy it. Set an alert and come back and wait until people are scared about something. The world is ending. We're going to enter a recession, as the thing may be. And then wait for it to hit that level. The key thing is to remember that you wanted to buy it at 100. And so when it does come down to 50, you kind of keep that same emotion that, oh, I really wanted this. Oh, now it's the level that I want. And that's hard. That's incredibly difficult. That's very, very difficult. Very, very difficult. But you can do it. So that's the bull posting there. And so as far as what am I looking at right now, I just don't see with the stock market the way it is right now, there's one of two things that are going to happen. You had this big sell off. That was the opportunity for at least the first half of the year. Um, you're getting up to the all-time high, which, all-time highs, big highs are very important. So it's probably going to inch its way up like it is right now. And then you're going to have one or two things happen. It's going to break out, maybe give us a little pullback and then go, or it's going to fail because everyone thinks it's so close. I know that's kind of obvious. It's coin flip, but there's just not that much to be gained up in here, right here. See, for the risk of the downside, I would rather wait until we get a solid breakout and then start looking at things to get bullish again. Because then you're kind of sure that it's gonna be bullish. What I don't want to happen is a situation like I said. I've had this I'm an old not an old trader, but I'm getting on up there. But there was this year that kind of reminds me of this back in 2018. So here's where January of 2018 started, and you had this big, first quarter. You know, this was based around the Fed talking about not even raising interest rates, but talking about uh, raising interest rates. Notice this big bullish, no pullback trend. These kind of things actually scare me. When you see just this constant run up without any major pullback, that's that's when you have things like this happen. Big sell-offs. I don't know what it is about it, but that's just what happens. Then the year kind of was a little lackadaisical as it recovered, and then you came all the way up here to October of 2018. Very suspicious about October. That's the 1987 crash. It's kind of like a superstitious month for traders. And into Christmas, huge, huge sell-off. Big opportunity though. Volatility, the VIX expanded dramatically. It was great for trading. I dug myself into a hole in the first part of the year, like a lot of people did. But then when volatility expanded and I was trading options, we mean long options, puts and such on various things, basically just trades I would have taken any other day. It just so happened it ended up being a great year. Or if there was options, but I didn't think it was a great year until it finally did that. So I'm not worried about bear markets. I love bear markets because as volatility increases, that means the opportunity for traders goes up. And so that's what I want to see. And man, these kind of what's going on right now is just lulling me to sleep, lulling me to sleep. Not sleep rather, but just kind of chilling, just letting things ride, being patient, waiting for some kind of a big move. So that's that. By the way, if you have things to look at, make sure that you put them in the chat and we'll look at them. So yeah, let's update on Bitcoin and Ethereum because I'm still in both with Bitcoin futures, although it gave me a little bit of a gnashing of teeth. Like I said, I'm not perfect. I don't like it when things don't go my way initially, but they couldn't get it up there. They couldn't get it up. They tried, but what do we have now? We have a fourth week without breaking the all-time high. Like I said, if you're on social media and you stare into the abyss, it stares back into you. And so I post about it in Bitcoin maxi chats, and of course they don't like it that anyone would say anything against Bitcoin. But I would be nervous if I was long. But earlier this week I was like, oh man, maybe they're going to be right. But that's why you kind of have to have a thesis and stick with it. Ethereum, likewise. Uh, if you look on the daily, it looks like a bunch of crap, especially when it ran up here. The reason I didn't worry about my shorts here is because about Monday and Tuesday of this week, when we had these big bullish daily bars, people were pinging me really excited. And again, just kind of taking a read of social media, that excitement, I didn't think it was very warranted for where we're at. And now if we zoom out to the weekly where things become a little more clear, again, if you're ever confused about price action, you're looking too low in time frame. Zoom out, bro, as they say when they want to look at the 1,000% gains. But As far as the resistance that I've got as the level I'm trading, 2750 roughly on Ethereum. Uh, boom, boom, boom. And even though the daily is showing some volatility, it is not breaching that level. Bar closes are big. Same thing with Bitcoin and Ethereum. And so they just keep on smacking against their resistance, maybe faking some people out, thinking that it's going to go long, and then taking their money. So, all right. Let's see. What else we got here? I saw this today. This is a little bit of a friend of mine tells me when it comes to I don't know why this article says MicroStrategy director quietly dumps all of MicroStrategy shares. I don't know if it's quiet if it's on the news, but this guy, I like this from, what is it here? This guy basically bought about $700,000 worth back in 2022 and sold it for about 10 million. I probably would too. Uh, yeah, I mean, there's a little bit of bear posting there, but I mean, I saw that in a thumbnail that Saylor was talking to Jordan Peterson. Didn't watch it. I think I've pretty much heard everything I need to hear out of Saylor. He's just trying to get young men to live the dream of buying his company, not Bitcoin itself, but buying shares in his company, enriching himself, while trying to ostensibly pump the price of Bitcoin. But I feel like I'm Michael Burry in 2007. I'm just early, not yet. Um, but yeah, we'll see. So I'm still short cryptocurrency because every time I log on Twitter, and maybe it's because Twitter's algorithm, because I read a lot of stuff about crypto, it keeps on trying to get me to buy it. But yeah, I just can't do it. Not at this point. You got to remember that I've called the longs, but I've also called the shorts a lot more. But the long, based upon Ichimoku, which I've got a post about it, was back here in January when it finished out the November FTX debacle and price got outside the cloud. That's when you know. And again, this is a time to go long something when it looks like this. And Bitcoin, and maybe it's just because I've seen 5 of these that I know like that's when you need to be getting long this or anything else. When everyone thinks it's dead, when it's gone through a really bad time. And so that was when it went bullish. Now, of course, I thought it was going to turn before that. So I'm kind of a perma bear, I admit, but I'm able to see the bull, but only when it's at like maximum opportunity. And so as time goes on, it's less and less of an opportunity for me. But people won't tell you that. If people want to get, lots of engagement, then they will just talk about what is the hot thing now, what to buy. What everybody wants an easy answer. And the answers that I talk about, the answers that work for me, like I said, are the ones that no one's talking about. Like back when Monero, which of course, as you may know, my favorite, when Monero, which by the way, I'm looking at Monero to come down to hopefully the 50% retracement, getting there about 292. That's what I'm looking for the pullback to do from this big eat. Okay. Again, can't buy stuff here. This whole time I've been like, nope, can't buy, nope, can't buy, nope, can't buy, nope, can't buy, waiting for it to pull back to a 50% retracement of the trend. But the time to buy also was back when it got delisted in February 2024 from Binance. That's when everyone thought, oh, well, no one's going to be able to trade it. Everyone's going to have to sell their Monero because they can't trade it in Europe. And yet it happened to be the best thing ever for people that believe in it being the real freedom cryptocurrency, the private cryptocurrency. As I always say, Monero is what people think Bitcoin is. And so, yeah, I'd rather have it than Bitcoin. And I love the attention that it's been getting. I love the articles because people know that I'm bullish on Monero. There was a little debate that I got into, what is it, last week, and I kind of responded to it on Twitter. Where is my reply to that? Someone basically, oh, we got to talk about Bitcoin being a risk asset. So this guy, Paramount Bitcoin mentor and never seller, well, we know his opinion. So talks about Monero being money, which is kind of ironic because Monero has money as the root word. Uh, the problem with this thing is that Bitcoin people always start from this precept. A precept is when you're making an argument, something that you assume to be true. It's not necessarily a principle, but it's a presupposition. You just assume it to be true. And they assume that Bitcoin is sound money and it is the only sound money. It's better than fiat, et cetera, et cetera. I'm not going to hash that out because that's a whole economics argument. But from that premise, when you're comparing Bitcoin to Monero, they look at Bitcoin's fixed supply as being this panacea of good. And Monero has a fixed inflation rate. In other words, it's not really a fixed percentage, but a certain amount is just an actual amount of Monero is released through mining, kind of like Bitcoin, through doing the processing of nodes. But as the supply increases, that percentage is going to get smaller, smaller. So it's kind of cool how it works that way. So the inflation rate will actually decrease every time. But never mind. That's not the point of it. The point of it is having private eCash for people to transfer. And so, but when a Bitcoin person comes to this, they assume that having fixed supply is the end all be all. It's the only good. It's the only thing that really matters or should matter, because there's people who are like, oh, we know inflation, they're printing so much money, you're losing your buying power. Yes, we know these things, but that little bit of inflation keeps the economy going. Because if people had money that they didn't want to spend on anything, they would just hoard it. Because why would you buy a hamburger today for 1 Bitcoin? Just throwing that out there, just one, because I paid for lunch with Bitcoin in 2012. 1 Bitcoin for lunch back then was about $11. Wow, $11 for lunch. I mean, that's pretty bad inflation, huh? But no regrets is what gave it value. But why would you do that if tomorrow or next week you could get 2 hamburgers, or you get a nicer hamburger? I'll eat the cheap place today, but I'm not going to eat the expensive place because I could buy more later. And that's the thought process, and that's where the economy will grind to a halt. And no one's been able to explain to me why that isn't going to be the case. Anyway, you just need to read more about Bitcoin, bro. So talk about Bitcoin being world economy dollars. I got something to say about that, but so the point here is that it's just kind of just a lot of bitter posting about it, which is great. I love that it's getting attention. But the gist I want to say here is that, I don't think Monero is going to take over Bitcoin, because I don't think the point is to take over the world money. I don't think people want either Bitcoin or Monero to take over world money, nor do I think they're going to choose either one to take over world money. Actually, and if you look at what Monero has actually taken over, I know this is kind of turning into like a bit of Monero bull stream, but it's already taken over the dark web markets. Some markets don't have Bitcoin. Some markets only have Monero. And the gift card markets, 39% Bitcoin, 38% Monero. So it's already kind of taken over that. It's the only thing that really, so I think the primary use case of number go up on Bitcoin is going to be the case. I mean, I think there's still going to be money to be made in Bitcoin, just not that much right now, because it has fixed supply, and it's very conducive to the kind of corporate Ponzi's that a lot of people are doing. Right now, the thing that's interesting, somebody put it to me. I finally articulated to me that what people are doing now in the Bitcoin space is buying up, acquiring these publicly traded companies because they have a stock ticker, and then selling shares to buy Bitcoin. And it's a bold strategy, Cotton. We'll see if it pays off for them. But I don't really care to be involved in that. I'd rather look for companies that are actually producing goods and services, and can increase their revenue and services they do for people. So that's just me. I'm weird like that. Like I said, I like weird stuff, like discount retailers, candy companies, like Mondelez, again, up how much? 16% from earlier this year. Oh, no more than that. Yeah. So, yeah, what was the last one? So we shall see what happens in that regard. Any things to look at that you guys have? What's up, Zygor? I want to talk to you a little bit offline, a little bit about politics here in a second. All right. Well, like I said, this is a short update for this week. Um, Still remain short U.S. dollar, as in long the CAD, long the Chinese yuan. Tesla doing its thing. UNH hanging out. Palantir mooning, breaking new highs. Oh, that's right. The thing after one last point. So, and I made this point earlier today. So this is three things. Open a new tab. So this is top is S&P 500 futures, middle is Bitcoin, and the bottom is gold. Now I don't agree with pedo Schiff. If you don't know what I'm talking about, just I guess you're not as terminal aligned as me, and on Twitter. But there was this. He is right because he shills gold about um, gold being and remaining the safe haven asset. And you can kind of see the correlation and inverse correlation to these, right? So, of course, at the top you have the stock market when those rockets were fired tanked, Bitcoin tanked, gold rose. And then today, as there was more drama, they kind of moved lockstep with each other almost, with Bitcoin and equities being correlated. And so there was this argument that was being made back in March of, and this is what I'm going to close it out on, like what level I'm really looking at for Bitcoin at this point. There was back around when we were already worried about the tariffs and everything like that, there was a 50% level at 79,285, which it held. But right around here, this week in particular, that was when the stock market really dropped. It was the last week of March, first few days of April. Okay. But I remember there was incredible amounts of volume that came in during that week, particularly during the US session. It was kind of out of the ordinary. There's a lot of volume back and forth, but it was just so manipulated because I remember the stock market dropped like tons there, but they held it. They held it. People were deploying capital, I believe, to hold it up to keep it from liquidating. And then this move they finally had down to push it down, that's on a Sunday night when nobody was in there, low liquidity. That was when that final last push came down. They couldn't hold it up. And so this narrative took shape, and I knew it was going to take shape when I saw that happening about how, oh, Bitcoin was now the safe haven asset. No, it's not. I'm sitting here watching the charts, lower time frames, higher time frames. The correlations are absolutely they're consistent until that moment. And going again, correlations get broken from time to time. But I did a whole post and I did a whole analysis about just how correlated these were. And of course, like any good trading thesis, it gets blown out of the water by different events. But I don't think it's changed. I don't think that things have changed that much. This time is not different. And so, left to their own devices, the two are still correlated. Left to their own devices, Bitcoin is still a risk asset, despite what people may think it is. And so, as long as stocks are pushing up at all-time highs, Bitcoin is likewise pushing at all-time highs. And one of two things is going to happen. Like I said, and this is why I'm just kind of sitting and chilling and waiting, because I mean, you're gonna get a break of the stock market, which I'm smelling a bear, but I'm very careful not to start buying puts on it. But I'm gonna wait and see it to go out. I'm gonna hold my longs and then wait and see. But you got stocks at all-time high. You got Bitcoin can't break its all-time high, and now is the point of maximum risk, not maximum reward. I like to get stuff like Hershey's when it's at the point of maximum risk, when something's gone down to the point, excuse me, maximum gain. When everything has made this thing dead, or Mondelez or Whirlpool, UNH, you know, uh, that's what I want to. That's what I want. That's what I want to see. I want to see things at the point where all that risk has been realized, and everyone thinks it's dead. But as long as people are saying to me, like, "Oh, you got to buy this. Oh, it's going to go 10x from here, even though it's already done 10x," I just can't do it. And that's the one thing I can say that I have worked into my mindset that has done very well. It's at least very much allowed me to maintain uh, the money, but it feels bad sometimes when you're missing out. But that's okay. But yeah, any symbols to look at in chat? You just want entire portfolio loaned into MicroStrategy. How's your MS? Well, how's your MicroStrategy? Was it MSTY, the yield max option strategy? So, did I post that analysis that I did where I looked at is the yield one? Yeah. So I'm actually somewhat wrong about those. By the way, this is basically someone doing a covered call strategy, and then without you having to worry about selling the covered calls and keeping up with it, they just let you buy the shares. The one that I was more familiar with was Tesla, which is the Tesla one. And don't be deceived by this chart. At first, you look at this and you're like, oh, wow, this isn't doing well at all. But if you look at the dividends, that's what you're really making money on. And they're not consistent because what they're doing is they're selling premium. They're selling covered calls. And what that's going to be very correlated to, entirely correlated to, hold on, I got to do this on, Thinkorswim, because we don't have implied volatility on, TradingView. On the bottom is a little implied volatility chart with colors, with pretty colors. Let's do this. So Tesla, can we do this? Yeah, there we go. All right. So back to 2023. Give me a second. Get this to 2023. The returns on this are going to look more like the implied volatility chart than the price chart itself. Because when there's more IV, there's more premium to be sold, so they can sell for more dividends. Actually, the best thing to look at is Misty. So, because again, let's look at MSTR, and then this began February 2024. And then where is February 2024? Here we go. So there we go. All right. February 2024 is right here. That's where it basically started, kind of like that. There you go. Okay. So you can kind of see. Let me look on my OBS, make sure that shit looks right. Yeah. Oh, wait. Let me move this off. Okay, there we go. Don't need to look at my face. So when implied volatility goes up, this benefits greatly. And so what you need for this thing to make a lot and for it to go up is the implied volatility of MicroStrategy to increase dramatically as it has. And so it has definitely not been, and it's like low by any means, but it's low compared to itself. That's the thing. It's low compared to what it was a year ago. And that's why it's color coded this way, because within a year, because this was November of last year, implied volatility was 223%. Now it's at 66, which is still like really 66 is still really good implied volatility because like Coca-Cola is like 19. So, but what I did, and I'll just do this to kind of rehash it, is let's say, by the way, a little trick for AI. I'm going to use AI to like calculate the returns. The trick for AI is to role play. Somebody told me this, that he works professionally with AI, and it kept ChatGPT kept forgetting things. I was trying to do some analysis on distressed corporate debt, and it kept on hallucinating words. Excuse me, not words, but numbers. And I would have it look at a bond, and it would forget about it. And so he said, "Have you?" He said very simply, "Have you asked it not to mess up?" And I was like, "What?" Like, of course I don't want to mess up. What do you mean? He's like, no, no. What he does, what prompt engineering, like is a whole like thing now, prompt engineering, making the right prompts for AI, is telling the AI what mindset to put itself in so that it behaves correctly. So in other words, you are a professional money manager. That means that every dollar matters. And that's going to make it not mess up because it matters. So, and what we want it to do is calculate the return of investments in stocks, MSTY and TSLY, starting in March of 2024. Was that when MSTY started? Well, no, let's start from the beginning. Let's be very generous. February 2024. February 26th. Yeah, we'll give it all the way back then. February 6th, 2024. Show me the different capital scenarios if held and reinvested dividends, if not, if dividends were just paid cash. Okay, we'll try that. And so this should hopefully make it pretty diligent. And then what I found, I don't know if I think I posted this on my Discord, which by the way, if you're not on it, Whirlpool came from this live stream, and this good for idea generation. So let's see here. All right, so about 20 bucks, it's $21. Capital gain, very small, but dividends, you made about $10 a share. And so your returns, if you had just kept the cash, is 51%. If you had reinvested due to compounding, it's 57%. Even though the chart looks like this, you're actually up 56%, roughly. Tesla, that's the Tesla one. You've lost almost 58% of your capital, but dividends have been paid out $229. So yeah, you're still down 47%. I think though, we need to do this go back and do Tesla to 2022. Let's be specific. Tesla starting, let's do December 20. Let's do Tesla to from January. So I think what I did, Tesla's dividend, and there may be other stocks out there. What there's an Nvidia one. Let's see. So you're down about 6% if you had started back then. So even though you're down in the share price from January to here, almost 74%, it's not that bad because you're getting the premium that they've sold. Either way, though, I don't really like the product. Maybe that's just because I would rather just do this myself if I wanted to. Even though I don't, I've tried. Case in point, I own a lot of shares of Tesla, and I just to do something with them. I've been selling covered calls against them. I'm actually short the 320 um, calls out to August, which is very unfortunate because, you say, what do you mean unfortunate? Why didn't you close that out when Tesla was down big? Well, because I just didn't. Yeah. So yeah. So basically they're basically in the money by $5 right now. We'll see what happens. I'm kind of tired of it though. I'm tired of having to deal with it. But it does make money over time occasionally. But then when it goes, in the money, you got to roll them and you got to worry if you're going to get your shares called away. But it's a good problem to have because, your stock price is going up. Um, it's a very volatile stock. It's being greedy selling covered calls, honestly, if you ask me, because it requires that you have to like maintain it, not a full-time job, but it gets that way. So, all right. NVIDIA one is NV. Let me catch up on what you said in chat. Yield Max is a total scam. So I bet they're the ones making money off of it. Yeah, the people doing this, they're probably charging a management fee, of course. So I bet you that 6% that comes out of the Tesla one, I bet they're. I'm curious. Do you know what their management fee is? Yield Max is total. NVIDIA was NVIDIA. Wait, so what's the difference between the MSTY is yield max? So why don't you what are you doing if you don't like it? Expense ratio is about 1% annually. Yeah, so basically, yeah, essentially 1%. Let's see, what is Maxi's expense ratio? What is Maxi? Is that like a LOL? What does it do? What does this thing do? Simplified Bitcoin strategy plus income ETF. What does this do? Bitcoin covered calls. Very high expense ratio. I mean, the reason that Robinhood, which I don't own, and I kind of lament it. What are you going to do? I can't buy stuff going up like this. I mean, the time to have bought it would have been back here, but since I didn't like their platform as a trader, I was kind of like, nah. But they're making so much money off of. Let's see, break down Robinhood's revenue by source. The reason they've been doing so well is because of crypto trading. Because nobody cares about commissions with crypto. Buying and selling stocks, if you've seen all the advertisements, is free because they've been around for so long. They're boring. Nobody cares. But everyone thinks they're going to get super rich off crypto, so you can charge them whatever they want. You can sell shovels to the gold miners, essentially. So I kind of missed out on Hood, but one of there we go. So crypto is more than half of their revenue. Probably not as much volume, but it's more than half of it. And then options, because oh my goodness, you can make so much money off options. I'm surprised they're even making any money on equities. But I wonder how that comes in. Net interest income, that's for people having cash in their accounts. Other, yeah, 46 million for gold subscriptions. Hey, I kind of slept on this, but they've got a good thing going on. Crypto accounted for more than half the transaction revenue of the quarter. Yeah. So my thing is, if I'm going to be bearish on crypto, and the price of Robinhood has already climbed up to here, I can't buy it here. But I mean, I think there's a little bit of the reason it's been yeeting is there's talk of inclusion in the SP 500, but that is not a bullish sign. Don't really have time to break into it right now, but you know what? What do I mean? I don't have time to break into it. Let's just ask GPT. Based on the research that you have as a financial analyst, would you say that inclusion in the S&P 500 is bullish or bearish on average to a stock after it has been added? So it's really kind of a buy the rumor, sell the news kind of thing. And I remember in particular Alcoa AA. It used to be it's like double A, so it was the top of the list of S&P 500. It also had the first earnings announcement of the earnings season to kick off the earnings season. And so every year for almost a decade, as I was trading, it would be, oh, Alcoa is kicking off the earnings season. And then they dropped Alcoa from the S&P 500 because the share price had gone down so much. And that was roughly, I believe, in no, it wasn't. It was basically around 2016. I think they dropped it. And I remember specifically after they did, it went on this huge tear up. Of course, now it's just kind of hung out. But right after it was dropped, it did that. So pre-inclusion effect, bullish. Stocks outperform leading up to it because people think it's bullish. And then post-inclusion effect, 1 month after underperform, 6 month, and then 1 year underperformance. Definitely a buy the rumor, sell the news. And so, like, can't be a buyer of Robinhood right now. Just waiting. No, can't do that. Tesla pricing for oh yeah, Tesla was a big one. People were buying it for that. This is kind of like the amateur level of investor where you kind of come in and use first level thinking. I've been listening to a lot of Howard Marks a lot, and he talks a lot about second order thinking. I think you got to be careful. Don't get into third order thinking. But first order thinking is it's going to be included in S&P. That means it's going to be in a bunch of ETFs. That means a bunch of people are going to see it. That means it's going to go up. That's first level thinking. But people first level thought Tesla, because this was like their introduction to stocks, and then it underperformed. Nvidia rose before inclusion and then entered a multi-year correction afterwards. Moderna, yeah. So yeah, that's what's going on with Robinhood right now. And that's why I can't jump into it. I can't, like I said, I don't want to buy the things that everyone's yelling about. I want to buy the really bad stuff. And by the way, oh, out of curiosity, do the opposite. What happens typically? What statistics and case examples of stocks being dropped from the index? Like I remember anecdotally that Alcoa example. Stocks removed typically drop 5 to 8% around the announcement date or actual renewal, mostly due to forced selling by index funds, of course. But post removal performance, 1 week is a drop, 6 months is up, 12 months is up. See how that's counterintuitive? So think about it this way: whenever something's being talked about, being added to the S&P 500, you can ride that wave, but it's a sell the news event. But on the flip side, when everyone's considered, oh, it's getting delisted, Yahoo, 18% rebound after it. GameStop removed due to struggles. Yeah, okay, GameStop. There you go. Abercrombie. Yeah, yeah. So man, there's some good alpha in this. I'm glad I actually asked it. Man, Chat AI and ChatGPT is just well. My first thought was I don't have time to do this. It's getting close to the hour when I usually go to, but I got my answer. That's awesome. All right, let's see here. Oh, you just transferred all your accounts to Fidelity. Finally, love fractional ETF buys. I want to talk about something. Do you have a is it a tax advantage or not tax advantage account? If you don't mind me asking. I have a lot of not tax advantaged stuff. Sucks. But that's because I stopped working over 10 years ago. Okay. Man, that's confused. I bet you're as confused as I am come tax time. Um, so are you familiar? You of course know what the stupid wash sale rule is, right? You're pretty apprised of all government theft. I know. So for those that don't know, actually, I'm not gonna So the wash sale rule basically keeps you from being an active trader in stocks if you're an American taxpayer. In other words, if you buy and sell something within 30 days and you take a loss on it, you don't get to count the loss against it, which sucks. So your losses just don't get to count it. Now, there is a little bit more depth to it than that, but because it really changes your cost basis, yada yada. But it's just really annoying. Okay. So, you went down a rabbit hole, learned a lot about tax laws and capital gains. Should have a pretty down one. Okay, so one thing that I started doing last year was, and this is automated, but I want to do this manually and see if I can't mess around the edges because I'm paying a management fee for it. But for those that don't know, give me a table of the two major Spider and iShares sector ETFs, uh, just the major ones, include their symbols. So the wash sale rule says this thing right here. Okay, so you can't buy at a lot. You can't do two things that are substantially identical. In other words, the same stock. But a lot of people used to do Coke and Pepsi, because they're basically the same thing. People are going to buy more sugar drinks. They're going to buy less sugar drinks. For GM, but they're not exactly the same, and you could get yourself into trouble if one does something a little different. So what they would do is they would sell their Coca-Cola and buy Pepsi the same day, and then you don't have this tax problem where you have to worry about the wash sale rule. But uh, what you can do is no, show me a longer list table with the sectors as column. So what you can do is you can trade back and forth between these sector ETFs. I didn't do like I wanted to. But basically, XLF is the Spider and XYIYF is the iShares. And so what you can do is, especially in a year like this, you could, this is cool. So let's just say that we're coming in here and uh, we don't bottom ticket, but we get this big move down, and we had a bunch of XLF that we bought in January. All right, and then it is down here, and we sell it down 14%, sell it down 767 a share. Okay, that is a loss that we brought on our taxes. We lost. We lost that money. What are we gonna do? We can't take me. I lost money. So I can't carry it over only $3,000 a year. Privatized gain. Excuse me. Privatized loss, socialized gain when it comes to capital gains. But on that same exact day, we bought the IYF, which is basically the same, isn't it? Because it basically is. And so now we're back up 14. And we would have also been up 12. We actually kind of looked out a little bit. We actually were up more on the BlackRock. We actually made a whole percent, but that's not the point. The point is when you go to do your taxes, you get to write this off as a loss, but you still are long. So you just got to take yourself free loss on your taxes. So what I want to do, this is going to be me and ChatGPT, we're going to sit down and we're going to talk about this. And because that's who I do that's ChatGPT is basically my financial analyst. And Grok is not very good at it, by the way. Grok is good maybe I don't even use Grok anymore. I used to want Grok to be good, but it's not good. Because once you figure out how to do the memory features, ChatGPT, like tell it, remember this, it works out pretty well. But I want to try to construct my own basket and basically try to do a sort of my own index following thing because the expense ratios on hold on. What is the difference in expense ratios between XLF and iOS? Probably going to be very, very low. Yeah. Oh, looking back, BlackRock being greedy. But yeah, it's small. It's small. As opposed to compare that. What I want to do is I want to create my own VU that that gives me losses. Oh, it's about yeah, it's really tiny. Yeah, whatever. It's it costs to play the game, but I want to create my own sort of portfolio. Like basically figure out how to weight the index ETFs. Do I do it evenly? Do I do market cap? Figure out how to craft my own market following sort of portfolio. Perhaps if I'm feeling a little spicy and cute, take what I know about sector rotation, this model that I talk about occasionally, which by the way, let's see, where are we at today? 65 days, basically that's 3 trading months. Healthcare, that's been driven by UNH, obviously. But yeah, what is leading? Technology and industrials. We're at the kind of the cusp of the bull market, according to this. Yeah, that healthcare is really kind of messing things up. Yeah, tech is tech has really been leading the rebound, and that's because that's what you have in a big sell-off is your volatile stuff, your tech stuff. It recovers the most. What if we do like a 120 day? Go back even further. But the longer term picture, in other words, industrials, materials, and energy leading. This is for the last basically 6 months, half a year. That is really kind of how I read this. If you look at the orange bar right here, is these sectors lead when you're at this point in the market. In other words, you're not at the tippy top where energy leads and consumer staples and materials lead. Energy, materials, consumer staples at the tippy top. And then as the market goes down, people go into safer stuff like consumer staples and healthcare. But that's going to be really kind of messed up by UNH dropping so precipitously. But we'll see. We're basically where the sector rotation says. But anyway, if I was going to get cute, I want to sit down and try to craft that. But that's a work in progress. If I have that together, I'll share it with you guys. But like I said, when the market is doing this, people are like, "What are you buying? What are you excited about?" This is when you sit and you do your research. You set your alerts for when it does come back to something that you want. And yeah, as a kind of a final note, I forgot to mention this. So when it comes to volume profile, remember how I talked about that area in there, that 82K level that we were at? That is going to be a key level to look at because that's where I think a lot of the manipulated buying happened. That's the whole premise of volume profiles, where a lot of the trading happened, the level that a lot of the trading happened at. And so if we get to that point, it's going to be interesting to see, do they defend their position? Because right now, all that capital that got deployed to prop up Bitcoin, it's sitting at a 25% gain. Pretty good. I mean, they want more, obviously, but they don't have that capital to push it higher. A lot easier to buy $84,000 something than it is $110,000 something. You can just buy more of it at a lower price. But anyway, all right, I'm going to call it. Thank you for hanging out with me. If you're catching this later, if you got any comments, remember this is for idea generation. The Whirlpool trade was from an old alert that I set. I put the date on it. I think it was in here. A friend of mine I played video games with, 2023. Yeah. So he has his dividend play. And we sat here for 2 years. It sat out there until it hit the level. Because this is when I first started looking at volume profile. So sometimes you got to wait that long. Patience. All right. Have a good weekend, everybody. Talk to you later.